Last week, I told you that when the stocks of high-quality companies sell off going into earnings, they become like coiled springs, ready to jump higher on any good news. And that's exactly what happened to Clorox today. After pulling back over the previous couple of weeks as money rotated out of the defensive consumer packaged goods stocks, this thing was primed to roar higher if they gave you a good number. Sure enough, Clorox reported a nice 10-cent earnings beat off a $1.30 basis with inline revenue and solid guidance. Management was able to cut costs and raise prices in order to post up its margins. And I've got to tell you something, that's precisely what we were looking for. A boost, and no wonder the stock surged $8.52 or 5.69% today. Can it keep climbing? Let's take a closer look with Benno Dorer, the chairman and CEO of Clorox, get a better read on the quarter and where his company's headed. Mr. Dorer, welcome back to Mad Money.
Thank you, Jim. It's good to be back.
All right, Benno, it looks like a combination of innovation and tremendous marketing and also just a lot of cost cutting, which I know you're great at, gave you that return that you predicted when people were concerned earlier last year. You predicted it could all come together. This was the quarter where it came together, wasn't it?
This was a strong quarter for Clorox with 4% sales growth and, importantly, a return to gross margin expansion, which is so important to us. We leaned into pricing to offset cost increases very aggressively, and that's been paying off for our shareholders, which is why we have been able to confirm our sales and earnings outlook. We're on track for another strong fiscal year, and we're also confident in our ability to continue to drive shareholder return in the long term.
So how does it work, Benno? You're number one or two, mostly number one in every single category. Resin prices really played havoc. So you were able to get price. Now, I know from the resin companies that I deal with that resin's coming down a bit. You won't roll back price because you're number one and the customers love your product. So does that just mean for the rest of the year we're going to see bigger and bigger expansion?
Well, you know, our cost increases were really price increases were cost justified, and that's still true today. We have a lot of costs, resin and others, that are up. And we have a lot of leading brands that consumers love that offer strong value to consumers, which is why we took pricing confidently, and it's going well. And that's a key reason why we were able to grow gross margin again, and why we're able to put ourselves in a position to have another strong fiscal year for our shareholders.
I was kind of amazed. I know you have about 17% international. Everyone else has really been whacked by the incredibly strong dollar, but I didn't really see it when I went over your numbers. And I think that's a good sign, because I do see it in pretty much everybody else's numbers.
You know, currencies was a big factor for us. We grew 8% in currency neutral terms, but we had a 16-point sales headwind in international. But international is only 17% of our business, which is why, as a whole, our company has done so well. We continue to invest in the U.S. That's our home turf. That's where we're particularly strong. And while it's not an easy market to do business either, it's a very strong and solid and stable market, and the consumer overall is in a good shape. Our categories are growing, and we're winning with the consumer in the U.S. That's been our history, and that's our future. And we like to invest in the U.S., and that's a big reason why we're doing so well right now.
I love the growth in Burt's Bees. I love the tremendous growth in the pipeline from the fiscal year 2018. But I was confused, Benno, about the Renew Life decline and the category, given the fact that I now see you in a major drugstore chain that I didn't used to see you in.
Yeah, Renew Life, we have some work to do. Renew Life was down in the quarter, but we're seeing a lot of green shoots right now. We're growing market share for the first time in 2 years with the largest customer in the natural channel. Nice. We're also growing in e-commerce. We're going double digits, and we're growing market share in that channel. That is the fastest growing channel in this business. And importantly, now that we have made the Nutranext acquisition also in vitamins, mineral supplements, we're able to merchandise Renew Life together with those other brands, creating merchandising scale, and that is giving us lifts up to 2x and partially even more. So, you know, some green shoots on Renew Life with more work to do, but it's a very solid business. It's a very strong consumer need. We have a differentiated brand with differentiated technology and a lot of hope and confidence in that business for the future.
Now, of the new products I see coming, there's a tremendous Burt's Bees body wash, obviously first half this year. HVR ready-to-eat dips? What's in those?
Yeah, Hidden Valley is such a great brand. And in Hidden Valley, there's really only a question, do you love it or do you really love it? And we're now giving consumers more reasons to really love Hidden Valley. If you think about Hidden Valley, historically, it's competed in the salad dressing category. That's a $2 billion category, and we're the market leader there. But today, about 70% of all the consumer uses are outside salad dressing. They use it as a condiment. Chicken wings, pizza, healthy snacks with salads, vegetables. And the dipping category is another $2 billion category that's growing at a 6% clip. And what we're essentially doing is giving consumers more access to Hidden Valley and giving them new ways of eating the Hidden Valley that they love. So this is a great new innovation with 3 flavors, ready-to-eat dips from Hidden Valley. Its customer reception so far has been very positive, and early signs in the market are too. So more ways for consumers to love Hidden Valley and more ways to grow for the Clorox company.
What a great idea. Now, last question again, e-commerce, you've been the best in terms of seeing where the customer is. You're just continuing to put more dollars. Is that Google? Is it Facebook? Is it just a combination of everything? Because that point of purchase is so amazing as a place to be.
E-commerce and omnichannel is a very important part of the future in our business, and as Clorox, we're investing very aggressively in it. We're continuing to see very strong growth on the e-commerce sales side. It'll be about 8% of sales, total company sales this fiscal year, which I think is at an industry-leading level. And we're also, I think, the only company in our space that's investing the majority of our marketing dollars right now online, whether that's in social or in other areas. So we're investing with confidence because the returns are strong. So we'll keep doing it and stay in the course, knowing that that's a big part of the future in our industry.
Well, congratulations on the great quarter, of which, again, you did predict to our viewers. Good to see you, sir. That's Benno Dorer, Chairman and CEO of Clorox. Thank you so much.
Thank you, Jim.
Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.